Hi, I'm Keith Mady with Landmark Title. The real estate market is constantly changing, and it's important to keep up with these changes. With Market Insight, we give you facts, figures, and stats to keep up with these changes. Come join us now.
Hi, everybody. Scott Kiburz here with Market Insights on behalf of Landmark Title for the month of August 2023. Sarah, let's get started on the numbers, please. So our agenda today is navigating the summer heat. Boy, July was a brutal hot month. We got some headline news from industry coming up and the numbers from Maricopa County. We want to just give perspective throughout the month here of what we see happening, which is normally a little bit of a final summer vacation, back to school time. And we just want to give the numbers that validate that. Next, please. Let's begin with some fast facts in Maricopa County for the month of July. This is as of the 1st of August. So we had just under 8,000 active listings at 7,945. We closed in Maricopa County 4729. Our absorption rate was 54+%, coming soon at 436. Interest rates, we did have another price increase from the Fed in terms of basis points, but our interest rates are lingering between 6.5% and 7.5% right now. Average sales price for the month of July was $55,915. And those are the fast facts from Maricopa County. Next. So, ladies and gentlemen, I just want to thank everybody here out there in Zoom land and Landmark Title. There was an event that took place. Christmas in July was a kickoff for helping families in need. There's a QR code here on the right-hand side of the page. If you want to hit that with your phone, there's still time between now and Christmas to log on and help out a family in need and come alongside Landmark Title. It's a way of saying thank you to them, thank you to our industry, and a way to give back to our community. So go ahead and be a community hero and help out if you can. Next. Hey, just a quick heads up. This is by the numbers. There was a Fed interest rate happening on the 26th. Ladies and gentlemen, that turned out to be the 11th price hike from the Fed since March of last year. We're going to get into some numbers here in just a minute. And you're going to see that our average sale price is down somewhere in the low 6%. But a quick data point around interest rates. In these 11 increases in interest rates from the Fed, we were about our 5th increase between March and August a year ago. And so they were working hard to tamp down inflation. We're getting closer and closer to a soft landing. Some say we will have a recession. Some say we won't. But please know there was yet another price increase, interest rate increase by the Fed just last week. Sarah, next. Some perspective quickly from John Burns, and here they're talking about homes and first-time home buyers and people coming out of college, coming out of dorm rooms. What are they looking for? So some things that are just common knowledge to most of us out there, but what they're saying is homes are getting smaller, but the kitchens and the kitchen islands where a lot of things happen in the kitchen are getting bigger. That designer showers are important. Don't shrink the primary suite, the main bedroom if you can help that, and just a little carve out on the outside is helpful. And if you are going to update especially post-pandemic, invest in the kitchen and what that looks and feels like. Next, Sarah. Some changes in our industry. This is Bright MLS news bulletin that came out. Bright is currently one of the top 2, if not the #1 biggest MLS association in the nation. It's based out of Baltimore. They're significant and they're very visionary in their work. And they announced that they have modified their MLS Plano and clear cooperation to include a $0 buyer broker commission amount can be paid. Prior to this, they did allow you to go all the way down to 1 penny, but you had to offer some kind of compensation to the buyer broker. In the Arizona Regional MLS, we deal in integers, and we had to have at least $1 offered. I think there's less than 100 homes today that are offering $1 in their compensation. Of course, that's up for negotiation. But ladies and gentlemen, this is a response to the big lawsuits that are going on by NAR. One of those is set to go to trial in October. If you get a chance to be in an audience with Scott Drucker from AAR, do that. He is one of the single best instructors and communicators on what's happening with those national lawsuits. This $0 buyer broker is in response to the NAR lawsuits, and that's just part of our industry changing. Next, Sarah. Ladies and gentlemen, I just want to share with you that 20% of the Arizona GDP is tied to real estate. And every time we do a sales transaction of a home, that's bringing in to our state's economy around $143,000, almost $144,000. And just want you to know that that's significant, ladies and gentlemen. There's a lot of pressure out there from a lot of different entities. But please know that 20% of our state GDP is real estate, and that is our economic impact per home sold. Good news to know. Sarah? Again, ladies and gentlemen, of all the slides, I've repeated this one several times, but let's recast this one more time. So our economy, we just had another Fed price increase. Technology, please know there's lots of partnering happening at the national stage. The latest one that came out this week is Redfin and Zillow have partnered with Redfin's new home sales, like a brand new home. If they have any capture that market, that's being interfaced straight over to Zillow and in syndication. That's a new relationship. Our government, there's a lot happening there, and societal shifts. We're still figuring out water, homes going for sale straight to rental, single family homes straight to rental. And our workforce and people wanting to live in Arizona, live and work, is still in growth mode. Those economic impacts are happening above us in terms of the real estate agent, buyer, seller, home buyer. Lot of influences happening at the national, international stage. Next, please, Sarah. Highlighted this again, and I made the little bit of bold in what I'm going to call even keel mode. And what I mean by that, ladies and gentlemen, there is a lot of pent-up energy in and around people wanting to buy and or sell. Part of that is due to interest rates. And then another seasonality factor that's in play right now is there's a lot of people taking their final back to school vacation, getting ready for school. If they have kids in middle school, high school, colleges usually start later in the month. So there is just this natural pause that happens in the month of August. It's going to show up in the numbers. And then somewhere late August, second, third week, there'll be a race gun that fires. It'll be more of a long-term marathon style race, not out of the gate running fast and hard like we see in January. And that will continue to climb, peak somewhere usually in October, and start to decline as we go into Thanksgiving and Christmas. So unless there's other economic indicators that happen, that's a kind of a trend we normally see in our Arizona market. Next slide, Sarah. By the numbers up here, ladies and gentlemen, this one is important. There we go. This is as of the 1st of August for the month of July. On the far right-hand column is where we're running down. So all the MLS listings that are 11,172, but in Maricopa County, which is what we tend to target with this conversation, we went under 8,000 active listings in Maricopa County at 7,945. As you slide down to coming soon on the 1st was 436. Pending 3604. Ladies and gentlemen, if you look at the last 3 months prior to pending, we're going to have a softer close in July, or in August. Our solds for the month of July, 5879, in Maricopa, 4729, and single family again, which I have long felt is the bellwether of our marketplace. Single family in Maricopa County was just 3710 for the month of July. and it's going to have a potential even softer landing than that come the end of this month. Setting expectations. Sarah, next, please. Again, perspective. We were just about 4,000 active listings in our lowest point a little over a year ago now. That was just 26 listings per zip code. With 7945 of the first of the month, that averages just 52 active listings per zip code. That is single family, townhome, condo, modular home, patio home. That's about where we're at per zip code as of the first of the month. Next. Ladies and gentlemen, just looking at some trends here. This is from ARMLS Rapid Stats. So our actives on this particular run rate date, 7946 on active listings. If we jump back a year ago this time, we were north of 14,000, like 14,040 listings a year ago today. Our solds were 4339, and our under contract just over 6,000, and this is as of the first. And then also, please, ladies and gentlemen, sold to list ratio, the red and blue line, the bottom left graph, you're going to see those come up in the trend as we hit the end of July. As of the first week in August, that has started to dip a little bit. The trend is trending down, at least initially in the month. We'll see where we finish this time next month. But out of the gate, it's starting to trend down ever so slightly. Our average sale price has dipped just a couple dollars per square foot so far out of the gate for the month of August. And we'll be tracking that very, very tight here between now and September 1st. Next, Sarah. Our absorption rate, our month supply of inventory did increase to 1.83 months with our absorption rate at 54.61%. You're noticing the blue line of month of supply climbed, and our absorption rate did go down ever so slightly. Next, Sarah. Here we go into August for all of Maricopa County. This is everything aggregated on the first. Our active listings on that date were 9677. Active listings down. What I want to point out in the yellow bubble, ladies and gentlemen, median sale price per square foot was down 6.5% from this time a year ago. We have been much higher than that. We've been closer to 10 or sometimes over 10, depending on the city, the community that we're in. But we are, again, now a little more than a year and a quarter into the interest rate increases by the Fed. And we're seeing this gap between today and a year ago begin to shrink. Next, Sarah. Here, what I'm trying to distinguish here is between Maricopa County and Pinal County, kind of side by side. On the left is on the first, Maricopa County was down just 6%, while Pinal County was down an average of 8.4. You aggregate those two together with the number of homes transactions, and you get the previous slide. Ladies and gentlemen, we like to be as close to our local markets as we can. So these two graphs separated. Just want to give some texture between Maricopa County and Pinal County, and the biggest differentiator there is, again, in the yellow, the percents, and then notice that there's north of a $60 price per square foot difference between the two counties on average, and that becomes significant in our marketplace. Sarah, back to all of Maricopa County. Want to point out this slide here in blue. If you'll stay with me, ladies and gentlemen, I put some green arrows on there for you. So our under contract was 6,015 homes as of the first. Now that's up just 1%, not quite 2% from a month ago. But I want you to take under contract at 6015 and slide down to the second level at new listings, 5364. And what I like to try to convey is I look at under contract as our burn rate, or what's burning. And we're putting fewer listings, new listings at 5364 than we are under contract. If we keep that up, there's a gap of not quite 700 doors. If we keep that up month over month, our inventory and absorption rate, our inventory is going to go down, our absorption rate is just going to go up. Also, Please note that overall, for all of Maricopa County, we're just about 8% new build. There was a time a year and a half ago where 15%, 12 to 15% of our homes were flip homes. And due to the interest rates, that percent has come down to an average of 6.1. But our new builds are coming alongside of us and become great options for buyers, especially on our markets in the Southeast Valley, West Valley, etc. That becomes a significant part of those target marketed areas. Next, please. Some quick perspective on active listings. We peaked in October of 2022, and that's when the companies got out of the iBuyer business, Zillow and Open Door at the time, and they had no emotional connection to the home, and they listed a lot of their inventory and got out of that industry. And if it didn't sell that week, they lowered the price till they got them sold. So that's an artificially high number at starting in August at 14,565, all the way up to 16,000 October a year ago. And as we burned off that inventory, if there was a normalcy that's established, probably in the March timeframe, we burned off that inventory. And then interest rates being as high as they've been, our new normal is somewhere around 7,900 to 9,000 active listings. Again, this is in Maricopa County. That is our current normal. Next slide, please. Under contract, as of the 1st July, we had 6015. That's on the far right-hand side of the graph. Pulling through that, I would describe our market today as much more relational than transactional by comparison. When our inventory was below a month of supply, it felt like, you know, everything had an escalation clause and an over asking sale price. Things can be very relational in this market. And so being in great communication, setting proper expectations with buyers and sellers, there's still business being done, sometimes at a very high level. Next, Sarah. Closed transactions. This is visual graphic here that January a year ago, we bottomed out at 3493. And we did not have an exciting July at 4339. If this holds true, what we're seeing pending right now, the close month for August could be this number of 4339 or even south of that, depending on how we finish out the end of the month. Sarah, next, please. And then finally, new listings. So again, this is kind of an even keel mode. We're at 6405, the far right-hand side of the graph, of new listings that came on the market for the month of July. That's in response to what we would normally see back to school, summer vacation, etc. So a little bit slower in our market, a little more even keel. Sarah, next. Ladies and gentlemen, we're going to spend a little bit more time here in the next few slides. So this is trying to get some aggregate detail out of the new listing summary in our marketplace. So first of all, I want you to just take a visual look hard from left to right on the green vertical bar graphs, and you are going to see a 2-year run of the number of new listings and the price per square foot. So what you're seeing there is for the month of July, visually, we were down a little bit from June and May, but we had a significant dip in December of 2022. That's a seasonality thing. And we go all the way back to December of 2021, and we see that other lowest point in the market. It's going to look a little bit different between now and the next 6 months for us because of the higher interest rates, that may artificially put some pressure on new listings coming into the market. Then you're going to see the red and the black line, the average cost per square foot and the median cost per square foot. We did dip a little bit in the month of July, and it's starting to carry over as we move into the first couple of days into August. Next slide, Sarah. current listings. And so what we want to look at here, again, just visually step back and look at the green bars, and you can see August through November of 2022, where the bars were north of 14, 16,000. That was when the big sell-off of the iBuyers happened. We've leveled off on the far right-hand 3 months, May, June, July, of what an active listing is in our current market. And then again, the black and the red lines are showing the gap between average and median sale prices there. And across the board, it's looking at an average of 332 a square foot with a median at 282 active listing, all the cities, primary and secondary in Maricopa County. Excuse me. Excuse me. Next slide, please. Under contract, same thing here. We're going to visually step back and look at the green bars. We did have a little bit more under contract in the month of July than we did June. And the average is 302 and 268 median and average sale price. Just want to give texture to the seasonality the last 2 years of our market. Next slide, please. And then finally, here's the solds. And so again, sold units in green, that's showing the visual number there. That's what closed business meant. Average sale price 282, median price 264 for all of Maricopa County. And again, that's going to vary based on the city. And you're going to see the trends up and down in the black and the red line, navigating our market and the number of units. Next slide, please. Average to list price selling here. And so what I'd like to point out is in the red and the black, that as those two numbers are starting to converge with the average sale to list price and the average sold to original price, when interest rates were really affecting us last November and December, what people listed at and what they actually sold for, there was a bigger gap there. We're educating all the agents, we're educating the consumers, and those two averages are starting to converge again, is the point. And it's 96 to 98%. So it's really strong. Everybody's out there doing a good job. Next slide, please. I included this one here, ladies and gentlemen, a couple lanes I want to point out. So we're looking at 2022 versus 2023, and I'm almost all the way to the right. I'm looking at month of supply. And in that column for 2023, we started out January and we had 3.4 months of inventory. We dipped all the way down in May to 1.3 months. And the amount of supply is up to 1.83 months, which is trending upward. What we're really seeing here, ladies and gentlemen, is that we truly have, in the grand scheme of things, low demand and low inventory. So if you have a house that's priced at market and it's a sought after property, there's still going to be multiple offers. It's still going to be under contract in 2 or 3 days. But due to the interest rates, there's a lot of seller contribution going on and a lot of other creativity to get the home purchased or under contract. And there's just under 40% of all the homes that are currently being purchased with just cash. And our supply right now, again, 1.83 months is a takeaway from this slide. Next, please, Sarah. As we move into the individual cities, so starting out with Apache Junction, and Sarah, we're gonna go through some of these a little slower than normal. I want to point out just a couple highs and lows. So focusing on Apache Junction, median sale price is down 8.2% in Apache Junction at $235 a square foot. Their active listings are down 5% from this time a year ago, and the month supply is 2.35 months. Next slide, Sarah. As we drill into Apache Junction, what I want to point out to you is this. In blue, in the numeric stage, we had 141 active listings, but 123 under contract. That is almost 80% absorption rate. And that's far more, 123 is far more than the current 95 new listings coming in to replace those. So again, I'm going to call that the burn rate. The burn rate is high. And what carries them is there is just about 2% new build happening in Apache Junction, depending on the market right now. As we pull forward, there's a lot of flips happening at Apache Junction of 11%. That's one of the higher percents in all the 41 primary and secondary cities in the metro. Sarah, next, please. As we go into Avondale, it's down 10% from where it was this time a year ago, is down. I wish that in the yellow circle graph is down or is up was just a little bit bigger, more dominant, because some markets are up, some markets are down. Next slide, please, Sarah. And what I want to point out here is just a little bit different. Avondale, 20% of their homes are new builds, really significant. Under contract is at 83 versus new listings at 96. So they're actually adding more inventory than, say, Queen Creek is. And I just want you to see those kind of trends differently, or what's happening differently in those two markets. Next, please. Buckeye. And then we did something just slightly different here. Buckeye is only down 6.3% from where it was a year ago. Listings are down by 42%. And what we're going to do in the future, ladies and gentlemen, is if we have a current event or something that is significant happening in a certain marketplace, we're going to add that to the right-hand side of this column and just provide more information for you. And there is a huge warehouse coming in at 3.4 million square feet out in the west side, and some first tenants have signed on, and it's to Buckeye. And oh my God, I thought 1 million square feet was a massive campus. 3.4 million square feet, gigantic logistics park coming to West Phoenix. So we have 3 or 4 of these kind of notes throughout the slide deck as we go through that just might pertain to a certain community, and we just want to include that for you and raise everybody's knowledge share. Okay, Sarah, we're going to go a little bit faster now. If you'll go to the next slide. Buckeye, please note here, under contract 367, new listings only 232. That is, oh my gosh, 130 some. And it's almost 100% absorption. It's in the low 90% absorption rate between under contract and active. The true definition of absorption rate is the sold at 207 under the 394. That absorption rate, not quite, a little more than 50%. But what's coming is significant homes going under contract in Buckeye. Next, please, Sarah. Carefree. I'm gonna start to end the conversation today right here, and I just want to point out in the yellow graph, Carefree price per square foot is up 20.8%. 20.8 is up in Carefree from 318 a year ago to 384. That is significant, ladies and gentlemen. Carefree is become significant that way. And you go, well, what's driving that? Well, Scottsdale and Paradise Valley anchor to the south, and if that becomes a community that is not quite affordable anymore, Carefree becomes that next market. Now, this is how you read this graph going through. And Sarah, I'm going to have you go forward, and I'm going to have you stop at Rio Verde, because we had some things happen in Rio Verde with water. And the governor signed some legislation to help take that pain off. I think there was just under 600 doors that were without water in Rio Verde. But the governor signed some legislation where Scottsdale's going to be back to providing water to Rio Verde. And when you get to this, you're going to go, well, what kind of effect does that have on housing? Well, that is going to have some impact on housing in a good way. And so we're going to get there. The amount up is, I can't remember if it's, there it is. Here we go. It's up 16%, ladies and gentlemen. It's up 16%. And our governor signed the legislation to get Scottsdale back into providing water as a win for all parties. And so you're saying, well, what happened in that market when you have something significant like the water dispute that was going on? It had a negative impact on housing. The governor got that information signed, that legislation signed, and the housing responded almost immediately. So Rio Verde has definitely rebounded. So Sarah, if you'll go ahead and continue on the way out, I just want to say thank you to Landmark. Thank you for the listeners out there who pay attention to this on a monthly basis. We're here to just give some great high-level market insights for you, things that we feel are important in our local market. We did just get the first step of 2 steps needed to go out in the future and make this class in person with CE credit. We're working on the final approval from the commissioner. So hopefully in the next 45 days, we can begin to offer that for those who would like to have an in-person conversation and get CE credit. Thanks to the folks at Landmark Title for the good work that they do. I hope you have a good finish to the summer, ladies and gentlemen, and good selling to you.
Thank you for watching. Please join us every month on Market Insights to be the realtor in the know.